Hey everybody, good afternoon. It's Doc Severson and Dave Lukas here with 12-minute trading. Today is Tuesday, the 20th. It feels like Monday, but it's Tuesday, the 20th of June. Welcome to the next expiration month, and welcome to the new bull market, by the way. Dave, it's like once we got about 4,200, you can just feel the market shift. You can feel this sideline money coming back in. Now, what we said last week is it's not going to go forever, and so I know that you got some thoughts on that as well too. So, go for it.
Well, this thing has gone really far, really fast. I mean, if you look at look at expected moves, the standard deviations outside of expected moves in the time frame of just the last 3 to 4 weeks. And this happens in bulls. You get these trends, they get hot. We had this kind of an AI rally from tech. And we really kind of went parabolic, exhausting all the energies in the charts. And I think, when you show the charts, that weekly chart exhaustion is just on the floor. It's the lowest it's been in over 3 years. So it's a natural point to pull back. This is a kind of time where for a couple of weeks you could go sideways or, pull back 5%. And that's really normal in really a quiet and trending bull market. You get these runs followed by a 5% or so pullback, and then that cements basically a higher low, and then you go to the next level, and you do that until you don't anymore and go back the other way, right, into a bear. And so I think that's what we've seen. You mentioned 4,200 crossing that, coming back to test it. That was a perfect textbook of that. So I wouldn't be surprised to see the S&P come down, hit 4,300 again, maybe undercut that, maybe go to 4,250 even. After the run up that we've had at NDX, the NASDAQ, probably at least 14,500, maybe down to 14,000. And that would be a really good level of support. And then, go on the next run up from there. So the next, I think, 2 to 3 weeks or so is going to be some of that consolidation. If anything, flat to down or a bigger move down to hit that 5% correction or so. And then, investors will step in and buy it back up. And you can kind of understand why that happens. We've had a run up like this. People have made a lot of money. Some selling starts to come in. They go, I'm going to take some of my profits. That starts to exacerbate the selling. And then it sells off to a level, a good, support level. Typically you see it in the charts technically. And then that's where it finds its next, really good support level and then heads up from there. So that's what we're looking at, I think.
Yeah, 5% move would be down to 42.25. Let me bring that up here and take a look here at the charts. I mean, this is what Dave was talking about, is that we have this exhaustion level here on the weekly chart. Now, this is the 9 period, but to me, the market's still working like it is. It's still very frenetic, like it was back in this area. Now, when it slows down, we're going to get more of this type of action where it just slow, quiet, and trending bull. And, we don't know how long this is going to go for, so we're going to ride this as we can. But we're seeing definitely a move into more linear movement from the market as opposed to 2022, where it was nonlinear. So we have one of these rare fractal multiple exhaustion signals here. So what Dave was talking about is that maybe we're just going to be consolidating, setting up range contraction, some type of range here, whether it's above 4,200, 4,300. We don't know where it's going to come down to in the meantime. And one thing I've always talked about is there's 3 different ways that a market can sort of gather itself. The most common is where, especially in a bull market, is where it just kind of walks sideways in a very defined range, or bull flag or horizontal flag, whatever you want to call it. The second way that people will see something like this manifest is an outright pullback. So if it actually just drops straight back down, which is very akin to what it was doing in this area here, if it just drops straight back down, that is actually the very fastest way to recharge a chart from whence it came. And the third way that I don't see very often is it just keeps on grinding higher, like this. So we'll see if that happens. I only see that during extremely, extremely bullish markets. Now, it does slow down when it does that, but it can literally recharge on the fly. Imagine an airplane like being refueled mid-flight is kind of the same thing. So there you go. That is that's what we're seeing, at least on the S&P right now. We can bring up the NASDAQ later on.
Yeah, I mean the Nasdaq is just the chart even low. The energy is even lower on the weekly chart, than even the S&P. And so, I think the Nasdaq will lead anything lower. I think at this point, because that's where all the money has been going into, right. And it's not uncommon. I think it's a really great time to refresh everybody on the four phases of the market. Right. So the four phases of the market, and this can work on a large cycle or even a small cycle over the course of a month, in a stock and in any chart and that sort of thing. But it's disgust, disbelief, acceptance, and euphoria. Right. So you usually have a move that is discussed. Right. And so like a 5% move down, if it happens real quick, like let's say it happens over the course of 3, 4, 5 days. Right. People will be disgusted. Right. Oh, the bear's back, blah, blah, blah. Right. And then all of a sudden it'll find its support and then it'll rally in disbelief. And everybody like, okay, it's just a cover rally. It's not going to go anywhere. And then all of a sudden it takes out the last high, right? And then people accept it and say, oh, great. Okay, so it actually is. It was just a pullback and here we go. And then they pile in. And then you get into euphoria where you get kind of that straight up move like you see on some of these charts where you go outside the Bollinger Bands and all that stuff. And then it starts all over again, right? Then you get a move down that's, disbelief, and it goes all over again. And those happen in short cycles. They happen in longer term cycles, bull and bear markets. But I think for this cycle of the last 6 weeks or so, I just think we're kind of the end of the euphoria stage and we're getting ready to go back into a little bit of disbelief, and start this next round of it essentially.
Yeah, on a much larger time frame scale, we're just now getting to the point we've just been through disbelief, like in, if we're looking at the weekly chart, we're just getting through disbelief, because even 2 weeks ago, I will go into Twitter every day and just sort of search out what is the majority of people thinking right now. And even 2 weeks ago, we still had most people saying, oh, this is just a bear market rally, just a bear market rally. In fact, I'm even seeing that a little bit today yet, that, oh, this bear market rally, this is not a bear market rally, guys. The way that this is acting, the way this is operating, I think we'll probably get at least another impulse wave higher. We'll see how we take out the 2021 highs, if in fact that we do that. And then we may be vulnerable yet again after that, because what I think is going to happen is it's almost like a garden hose that you let it you fire it up and you just let it go in the backyard. It will just go all over the place. And I think we're going to see more and more rapid cycles. We're going to see, more crazy moves up, and we're going to see more faster moves down coming up. And I think the cycle is just going to become more and more unstable. And if you zoom way out, this is actually a broadening pattern that is working out. And this broadening pattern has been happening now for several years. So we'll end up with higher highs, pulls everybody in, and then we're going to chuck them out. So learning to trade and not just learning to invest, I think is going to be a huge skill over the next few years.
Yeah, and that's kind of what we're getting to now. I think, the big boys are going to pull the rug out from under this a little bit and take some profits. And all these retail guys finally pile in, now, I think I saw inflows into tech were the highest since, whatever date, that they're putting out there now, but going back a long ways. And so that's usually the time, right? That's usually the time where, everybody's, it's euphoria, right? Everybody is, able to make money. It's easy. We saw this with crypto. You did a lot in crypto. We saw the big run up in crypto in 2021 and everything. And it was just buy it every day and you'll be fine. Right. And then all of a sudden the thing, crashed from 65,000 in Bitcoin down to 17. Right. Yep. And that's just the big guys fading it out. And that's what happens. And so, but again, they happen in small cycles. They happen in large cycles. Right. So I think we're just in a small cycle. Look for that 3 to 5% pullback, I would say, over the next 7 to 10 days. I think we'll give a pretty good idea, what we're going to get with that, if we're going to get that or just walk sideways, and then can make moves off of it. I would love a pullback right now, though. I'd love to sell the put sides in the pullback. On this run up, what I did is I went, because I sell a lot of condors, right? So I went and just all the put sides I could buy back for less than 10 cents. I just bought them all back, because knowing we turned the other way, now I don't have any risk to the downside. I can either I will be able to buy back my top sides. I'm doing some of that today, but I can resell those put sides in the same cycle, probably at the same strikes or maybe even lower if volatility kicks up on a bigger move down, and really double my money, right? And make more money with it. So it's, I think a lot of people, when you have moves like this, get kind of tunnel vision to just what's happening with the move, and so focused on that they don't see the other opportunities around them. And I think that's another important thing to do here too.
Yeah, we focus on what we fear. We focus on what we fear.
Yeah.
Like a lot of people get, like you say, get locked in on things, whether it's good or bad, to the exclusion of all the other opportunities. So yeah, I'm with you. It's like I can't wait for the next pullback so I can start to do some of the slower, easier, cash secured put type of strategies where we can, sell these big premiums and, just put a bogey out there and say, I dare you to assign me this stock down at this price. And usually it doesn't happen. So you just do it again and again and again. It's the easiest trade that's out there in the market, which so few people know about, which is kind of amazing.
Yeah, it is amazing. I mean, if you're sitting there in cash, right, and you can collect, 5 to 8% on your money every 3 months or 4 months just by selling puts, heck, 50% out of the money on stocks you'd prefer to own, or even put spreads on the indexes, like, 30, 40, 50% out of the money. I mean, why wouldn't you do that versus just having your money sit in a savings account that's paying nothing, that's losing every day? We talk a lot about currency, right? Money's called currency, and it's called currency because it has to keep moving. It really doesn't have any value if it's stagnant, right? And we see that. In fact, I was talking to a guy the other day. I was in the sauna after a workout, and we were just talking about the economy. And I brought up, if you guys have never looked at this, take some time, go to the website, WTF happened in 1971, and just peruse everything on that site, because it basically, from the time we decoupled from the gold standard, which was, $35 equals 1 ounce of gold, when we decoupled from that and basically became a floating currency, and then kind of repegged to oil, but the dollars floated, right? And so, like, ever since that time, the value of the dollar, how much it's lost, and it's just going like this, straight up in the air. Like, you should see like what percentage of income it took to buy a home or a car back in the 60s versus now. Like, check it out. So your money has to keep moving. It cannot sit stagnant. And so when you can take advantage, especially in a market like this with those type of strategies, that you can, give yourself such a margin of safety that it's just frankly pretty ridiculous. It's a great time to take advantage. And we love doing that. I do 5 different strategies on a weekly basis, or versions of them. I may pick and choose different ones, but like, I'll tell you, my long-term strategy right now has been just like clockwork every single week in this, and it continues to do really, really well because of the changing paradigm that we're in.
Yeah, I think people are going to start to understand the opportunity cost of sitting on the sidelines and waiting for things to feel good. And, things will never feel the way that you want them to be. And what you have to do is if you're going to be a successful investor, is to start to think differently about things. So we're all programmed with this sort of default dinosaur brain mode that keeps us safe in the jungle. If we got dropped off in the jungle, we'd use all of our senses to try to stay alive. And, that was programmed, however many million years ago into us, and we're still using it today. Unfortunately, when you use those type of skills in the market, you're going to avoid the exact types of opportunities that you want to be looking for. And so learning how to think differently is one of the keys to any market. It's not just the strategies. It's not just putting on different studies on your charts. It's learning to think differently like a professional. And a professional will see, fear in the streets and things like that, and start to go, oh, this is great. And most people are like, what are you talking about? This is horrible.
Right.
And, I had to go through a couple of cycles like that myself before I truly did understand it. I mean, you just don't get opportunities like that often. You look back on them and you go, wow, look what I should have done. And, but it's a whole different deal.
Yeah, even recognizing euphoria too. Like,
Yeah.
and this trade's panning out, but like last Friday, I think it was last Friday. It was the end of last week. I put on my double trade for the month, for the week, and I go out 4 weeks for those trades. And I usually sell an iron condor, but knowing where we were at in the cycle, knowing that we're probably going to get some pullback like we started to see Friday, we've seen some today, and I think even sideways action. I just sold the call side, and already I'm over 50% profit on that. These things usually take about 2 weeks for me to get out at the profit target that I want, but already one more down day and I'm out of that thing in just a few days, right? And so it's pretty contrarian. It didn't feel right, because the market's going up and up, and usually the trades that feel bad are actually the best ones a lot of times in the end. So yeah, so just keep that in mind.
Yeah, that's probably our greatest takeaway for today is, like, guys out there, if you're listening today, if it feels bad to place the trade, you're probably doing the right thing. And what you have to do is complete the circle, go back at the end of that trade and say, boy, I felt terrible at the beginning of this thing, but look what happened to this. It actually paid off. And so you'll start to reverse your thought patterns around things, and you'll start to look for conditions that normally would feel bad for this. And then you start to separate yourself from the mass crowd out there that generally gets their lunch eaten by market, any kind of volatility. Yep. All right. So, Thanks everybody. I want to appreciate the folks that did join us today. Actually, we've got a nice little group of folks that joining us today. While we're still here, if there's any questions you guys have, please chat them into the room. And for most of the folks that are out there, you're probably watching this on a replay. We'd love to take your questions if you just reach out to us at support@12minutetrading.com. We'll read your question the next week that we do this.
Yeah, definitely send those in. And we want to hear from you too. If there's a subject you want us to maybe cover in these sessions, send it in to support and let us know, or even drop it here on the channel in the comments area. Mm-hmm. We can see it there too. So, definitely, especially if you're a subscriber, you can do that. So if you're not a subscriber, definitely click the little bell so you can be notified and all that stuff when we go live and when we're on these channels. We're pumping out content, throughout the week. So we're always, sharing what's going on. Doc does a great job with the market minutes and all that stuff. So make sure you, if you're not a subscriber, check us out, subscribe, and keep you up to date with everything that's going on.
Yeah, we'd love to pivot. If there's a different topic that you want us to go over. I mean, we all have our little, pet topics that we think make a difference for the average retail investor. So we're going to continue to hammer on those. But if there's something that speaks to you, let us know what that is. All right, guys, it looks like we're not seeing much volatility into the end of the day, so we're going to sign off for now, and we will see everybody next Monday. So we're going to get past the longest day of the year tomorrow and start working on the downside for it. So thanks, everybody, for joining us here today at 12 Minute Trading, and we'll see you next time. Adios, folks.